A presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And what do we have? We've got the S&P off 1, the Dow up 27, the NASDAQ off 40, and the Russell up almost 7. So it is a tale of many cities, and that is probably the biggest story is not the movement in the stock, but the abject lack of any volume. As we normally say on the NYSE consolidated tape, you want to see something. I'm going to say something approaching 2.2 to 2.4 billion shares for just an average day. Well, we have had and do have and probably will have lighter volume than the day before Christmas all day long. In fact, I think we're going to be 400 million shares short of the day before Christmas, which is a notorious light day. So when you're talking about a total lack of volume as we go lower in the market, because we're at what, 2632 and got down to what was it? A little under 2,600. Let me go back here and look at this. What was it? I don't think this is right because I thought I saw 29. Was it? No, 2598 or 2595, something like that. This is not showing that up right now. Showing 2601 is the low of the day, which I don't think is correct. Maybe somebody can tell me in the den. But what we can see out here is just an abject failure of any kind of volume. Now, that's on the NYSE part of the market. Now, when we bounce over to the equities market, we find massive volume in the dark pools. I mean, massive, massive, massive. If you put the volume back in from the dark pool side of it, we've got almost 5 billion shares so far. So let's check that out. Let me reset it. Yeah, we got about 5 billion shares so far. So what do we have? We have no volume at the exchanges. We have a lot of volume in the background, and we'll see what this comes out to be at the end of the day. But it's almost all index-generated volume. The individual stocks, most of them have nothing. So we'll see how the end of the day comes out, but a very mixed message going from that. Maybe it's the last day of the New York Stock Exchange actually open for business, but there is something dramatically different out here. And when I see something different like this, then that means that we're probably set up for a big move, maybe higher or lower. I'm betting on higher tomorrow in that thing. So we've got a great divergence in the NYSE to the dark pool volume. Normally that dark pool volume is somewhere around 40%. It may be 60 or 70% today. So the guys behind the curtain have a lot going on. My thoughts are that with the light volume that I'm seeing in all the stocks as they drive them lower today, I've watched NVIDIA very closely, and I'm pretty much looking at that at 2250. It's trading at 2292 right now, or 220 and 92 right now. I'm looking at it going to 225. And at that point, if we get that one run, gets into that, we're going to start running people with stops on the short side of this market. We got to 224. And everybody dropped on it like a sack of bricks. Now, can they continue to do that through the rest of the day? It might be, but my guess is that we're going to get late in the day, and if these guys are on the wrong side of the market, we could, as I said earlier in the Tigers Den, have a short squeeze of biblical events, of biblical proportions, And I've been thinking that for the last day, the way that this market has been setting up, I would not be surprised to see a close of 2,700 on the S&P cash tomorrow, just on short covering. Literally everybody I know has thrown something short at this market. And when everybody's on one side of the boat is always a time to keep an eye on it. What else do we have going off out here? Okay, we're off 3 points on the S&P cash. Dow's up 40, Nasdaq's off 47. Russell continues to be the strong one, and the Dow up here, it's up 0.3%. Okay. Yes, it is very interesting. We've got sneaky volume, as someone says in the den. So we'll take a look at this. Yeah, whether you were long or short today, if you were long or short at the right times, you could have made some decent money. Good on each side. Now, traditionally, going into a Friday 3-day weekend, as we will be doing it, the one thing you don't want to see is light volume and light movement into the end, because normally you get some kind of counter move coming out of the Monday, and what I'll be continuing to look at. But at the moment, we'll see how the rest of the day turns out. We'll see. Okay, let's talk about a little history.
Then it's all just a little bit of history repeating.
On this day in 1979 at 4 a.m., the worst accident in the history of the U.S. nuclear power industry begins when a pressure valve in the Unit 2 reactor at 3 Mile Island fails to close. Cooling water contaminated with radiation drained from the open valve into adjoining buildings, and the core began to dangerously overheat. Of course, the real problem with nuclear energy in the United States, besides the storage of the waste material, has always been that the chemistry all came from bombs. Not a good thing to start off with. Bill Gates just dropped $500 million with the Chinese to build better reactors that literally cannot melt down. Physical impossibility. These things spread out the radioactive material. They're called pebble reactors, and there's some other trick stuff that the ones he's invested in. Of course, he couldn't invest here in the United States because they get sued out of existence, but China is more than interested in developing more and more nuclear power plants that are safer, better, and more efficient. So maybe eventually that technology will make it back here in the United States. One of the other big problems with this technology is the training. Mr. Simpson is not that bad of a stereotype when you look at the way, especially in the 1970s, people were hired. In France, what they do is they take people off of their nuclear powered submarines that have had 8 years of training. And then they run through training, more training than you would get if you flew an airplane every day. But that's kind of it. If we would have done it a lot differently, we might have had more nuclear power. But as it is, everybody wanted to scream the China syndrome on this day in 1979. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Please give me a call at 877-927-6648. Email me at path@tfnn.com or just put a message in the den. Always looking forward to your dulcet tones on the phone to me. Okay, so let's go ahead and start looking at some stocks. I had a fairly long list of them that are testing previous lows on lighter volume. And, you know, I would probably like to see a little less energy on the way down on some of these. But the volumes certainly, and we'll look at these today, seem to be kind of the cream of the crop. AdTrans, ADTN on this one, 660,000 shares at 1525. We broke that today with 200,000 shares so far. So again, this one may even close above that 1525. That would give you a valid buy signal. I wouldn't look for a retest of the high. That probably takes you to about 16 bucks. So again, you know, there's not, I'll have twice as many of these stocks testing previous lows with lighter volume in my scans tonight. But we'll just go through a handful of these out here and see just how light that a lot of these stocks are and how much pushing and shoving it looks like those dark pools are doing in the ETFs and in the indexes today, but not coming out in the individual stocks, or at least the ones I'm looking at. One of the better looking stocks out here is Advanced Energy Industries, AEIS. The leg off the March 12th high at 72.67, actually less than the leg up, so pretty good. You also have very light volume. The February 9th volume came in at 720,000 shares. Yesterday, you had 331,000 shares. Today, just 171,000 shares. So whether these turn Monday or what, you're going to need some kind of action to bust these, at least the individual stocks, lower. What else do we have here? Private, please look D and DM. Okay, we'll take a look at that. Air Lease Corporation. Another one where the energy actually from the February 23rd high back down to this low on March 23rd, which kind of just on top of with fairly light volume. You had basically 500,000 shares on that March 23rd low at 41.60. That's 45 cents below the February 9th low that had just about 1 million shares. So again, lighter energy on some. I'm not going to broad brush the entire index or markets with these individual stocks, but there are a lot of them out there. And we're going to go through them a little bit. I mean, you've got some of these things out here that certainly, if the market does turn up, look to be fairly sweet trades. We've had so many months and maybe even years of the same energy up, same energy down, the same energy up, same energy down. This one, we're actually starting to see the opposite of what we saw last month, which was those legs up having very light volume. We now have a lot of different stocks, generally not the big names that everybody's listening to on CNBC, but the lesser known stocks may be offering a lot of opportunity, and maybe one of the reasons that we see the Russell higher today. And the Dow's up, but I don't know. Not much of an index. I like the Russell. 2,000 shares, you're going to get some kind of decent opinion from 2,000 people. 30, probably not so much. Anyway, Air Lease, pretty good. Okay, want to look at D and DM. Dominion Resources. Well, you got a little test out here, but you got more volume. You really don't have that March 23rd, a little under 7 million shares. You got 10 million shares today, but it's going to close back in the trading range. Let's go back and look a little longer. Okay, so you go back to the 68.06 low of November 14th, 2016 on Dominion Resources, and you had about 4.5 million shares. So too much volume on that one, and certainly a long road. But if you do find a bottom, you could conceivably get back up to this gap at 78. That might be an interesting trade. Let's take a look at DM. Okay. Dominion Midstream Partners. I don't know how this is different than the other Dominion. Can we go back any farther? Is there anything else out here? Nah. Again, any of these limited partnerships seem to be flaky. So I wouldn't buy one of them, but interesting nonetheless. Okay. Now, what I wanted to talk about, do we have time? Yeah, I got 3 minutes here today. So getting more emails. I got a couple. We'll get those in the next segment. What I thought was most interesting coming into today that I didn't have an answer for was what's going on in Anadarko Petroleum and then in XOP. Anadarko Petroleum hit a nice test of its previous high on lighter volume. Not that much lighter, but enough, 15-20%. The January 26th high at 62.51 came in just under 8 million shares, and just under 7 million shares the March 23rd high. Now, of course, Anadarko, a refiner on this, and then you look at some of the other stocks like XOP, which actually look like it could be making some kind, not XOP, what am I trying, XOM, that look like it could possibly be making a bottom out here or banging out a bottom. Wanted to see fairly light volume today. You certainly have that 10 million shares. That compares to the 20 million shares that you had on the 23rd and the 30 million shares you had on February 9th down at 73.90. So any close back above 73.90 is going to be a valid test of the February 9th low here. And with APC starting to fade, maybe these XLE stocks are getting ready to move. I think that there has been a big problem for the last 4 to 6 weeks, and everybody has kind of ignored it, but I keep bringing it up. No one really follows it up very much. But what have we had in the oil and gas, or the oil and gasoline space in the last 4 to 6 weeks? That is the summer formulation turnover for those refineries. When they do that, of course, they switch from summer to fall. There's some 40 different formulations depending on where you live in the country. The AEI or EIA publishes their dates. They're pretty much over for this year. Now we wait till October before they turn the other way. But 2 times a year in the energy space, you have this kind of time where they shut down most of the refineries to change the output for winter and summer formulas and gas. And especially in places like Colorado, LA, it's a very big deal because they've got very special formulations. Trapped by the mountains in Denver or trapped by the mountains in LA, that giant fog, otherwise known as smog, can hit you very well. That does tend to skew some of these numbers around this time of year. So one of the things I've been thinking is maybe these aren't all they're caught up to be. We'll be back in just a second.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And coming across the wires is that the White House says that there will be no enforcement action on Amazon for antitrust, at least in the foreseeable future. That had been pushed out by a dubious news source earlier in the morning. And I'd seen it in enough places and enough yakking on CNBC to believe that that was at least part of the huge gap down today. Just the market conditions, the rest. But again, it's kind of easy to get that kind of stuff bought by the trading public when everybody's a little scared of any downside in the market. Generally, those things don't have a lot of effect when everybody's feeling good. But you've got a big move down. I didn't look at the current hit on Amazon right now. Let's take a look. See, and if I can type. The problem I have is I got this microphone, and I'm always trying to type around it. It's always been an issue. Okay, off 60, 70, let's call it $70, which is about 4.5%. Yeah, there's the internet tax either. And I think from what I read here during the break, that is not being considered either. I don't know if that's going to change very much because I think everybody thinks that Trump would love to go after Citizen Kane Bezos. But don't know. Doesn't seem to be making much difference in the price of Amazon at the moment, although you were down to 1386, which seems like a pretty good trip down there. I don't know if we'll get back there anytime soon. My guess is that this would probably bounce up to 1450 for Friday, at least what I'm looking at. Let's take a look at some other stocks. Again, you've got plenty of time to email me at path@tfnn.com. The Boeing company, Boeing or I'm not going, testing two previous lows today. And guess what? Nice little hammer, close above, it looks like the close above those two previous lows. February 5th low at 10.5 million shares at 317.39, 319.25. That one was for 9 million shares. So 10 million shares and 9 million shares. So what do you have today? You've got about 4.2 million shares. You spiked through that low and the previous low of 13 million shares. Not a lot of juice. And again, why I'm thinking that you could have, a nice 1 or 2 or 3 4-day rally going into fund buying, because this looks pretty good, at least on the chart. I know a lot of people are viciously bearish, foaming at the mouth bearish, and there's no real bear side to the market or bull side, only the right side. The question is the right side being short something like Boeing at half the volume of previous lows? I would say nay. Nay, I would say. I've got to figure out how to talk like Dr. Zeus. And I found out yesterday that Dr. Zeus, we don't pronounce his name correctly. He gave up trying to talk Americans into pronouncing his name correctly and just thought that Dr. Zeus is fine. What else do we have? Let's go look at some of these other ones. This one was kind of interesting to me. BDU, which is Peabody Energy. This thing went through the February 9th and February 6th lows. This was what, 2.2 million shares for Peabody Energy, which is a natural gas company. Down on 1 million shares yesterday, down on just 640,000 shares so far today. A close back above 37.48 would put it back into the trading range. Although I'm not a big fan of natural gas these days. Charter Communications, another one. This one is down to the 308. It needs to close back above that 308 low from October 27th of last year that had 3.5 million shares. Today, as you go below that, you have 900,000 shares. So let's say that you get 40% of that volume today. Man, I'd have to say that I'm thinking that, you know what? There's probably greener pastures elsewhere if you're short those things. Colgate-Palmolive, some of these things had tested their previous lows. This one had already and is starting to move up. Not a lot of volume in it either as it moves higher, but it seems to have found a low, the February 6th low, $68.19, 6.7 million shares. Tries it again. Doesn't quite make it. Pierced the low on March 1st with 5 million shares. You now get down into that low on March 26th with 3.3 million shares. So you're in there, and that's what I like. When I see tests of lows with half the volume, you're normally going to get a fairly decent bounce out of it, and you pretty much have. I don't know if there's a lot more left in the tank for CL out here, but again, I'm just going to go through a lot of stocks. I suspect I'm going to have probably 100 more tomorrow in my scan that show just how light a lot of these volumes are, why everybody concentrates on a handful of the FANG stocks out here. Okay, we're up 18 points in the Dow. Nasdaq's off 43. Russell's up 5. Nasdaq's off, or the S&P's off 3. So we'll keep an eye on this. XLE's still down 1. I was still thinking, hoping that that disparity between APC and the XLE would get back in sync. Doesn't look like we're going to get that today. Clorox, same kind of thing. You had 2.7 million shares at 125 bucks. That goes back to the February 6th low. You tested it a few days ago, 123.64. So you went below it. You're back above it. You did it with almost half the volume. Can we say that? It's up to 130.91 is the high today, but a nice little bounce. Some places to go hide in this. What's NKD? What is that? NKD, is that Japan or something? Oh, the Nikkei. Yeah, I don't have that on this one right now. So, nah, I can't. What else do we have? Okay. We looked at CLX. What else do I want to look at here? Garmin, was this one? Kind of vaguely remember looking at this morning. Yeah, this one's been bouncing along. Again, had some nice moves. Energy's kind of tailing off here. Light volume on this one today, but $56, $57 has been fairly decent support. We continue to see the 5 million share low on December 15th hit. You also have a gap up on November 1st of 3.5 million shares. And what are we doing now? 700,000 some odd shares. Today, just 388,000 shares. So some of these things are finding some bottoms. I do like mostly about Garmin that this thing went up with some fairly decent energy in the power law vector indicator up to the March 8th high, and on the back, on that pull back out here, energy came off about 20%. So it actually looked fairly good. Got a lot of stocks to look at. Would love to hear from you and your dulcet tones at 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, I got a email. Why do I think that there could be a short covering rally of biblical proportions? One, the massive amount of puts being sold, especially before 11 o'clock this morning. You could just watch it. And at the same time, you started to see what you normally see, which is the premium for the weekend out of puts that expire a week from this Friday and, all the way through the options expiration cycle, already taking the premiums out of a lot of the calls and trying to get people to cough up those calls. At the same time, selling huge amounts of puts. That's normally a fairly decent indication that they think the market could go higher. We have fun buying that really starts tomorrow, and with nothing on Friday, I suspect we could, at a light volume market, you could see a little bit of buying actually run a lot of these folks that have dived in at the bottom of the market. If you've listened to the show enough, you've heard me talk about the ability for everybody to seem to jump on the dead body of the market almost exactly at the lows. It seems like they don't seem to try to short very much at the highs, but man, are they big shorters at the lows. And that's what I saw today, along with the premiums starting to get pulled out. That's generally a good indication that they're trying to squeeze people out of those positions. And that's also a good indication that you get a turn. Just the incredibly negative tone of everybody that I talk to that are professional traders, the people on CNBC when I watch or listen to them, is just almost the end of the world. And the economy's still doing fine. I also saw, I don't know if we went through a few of these stocks, but I also saw probably the worst sector, which has been the housing sector. There are a lot of those stocks that have washed out and had no volume, and maybe we'll get to a few of them. I think Kimco was one of them, which will be the next one we look at. But there was just a great deal of incredible pessimism, and I put this quote in the Tiger's Den quite a lot. When everybody, it's from Jesse Livermore, he basically says, when everybody's fairly pessimistic, probably a good time to cover your short positions. Now, does that mean we are not going down? The answer is no. I don't have any kind of crystal ball here. I just know that if you're going to go into positions where you can lose a little and make a lot when everybody's on one side of the boat, they're generally fairly decent positions. And I've done fairly well of playing those opposite sides of the mass psychology of the market, because almost everybody tends to get it wrong, not at the highs, not in the middle, But just when they're ready to see the market turn, they can't help but to jump on any hand grenade that they can find rolling about their house before they click on yet shorting and going farther south on stocks. Anyway, Juniper Networks, another one out here, looks very interesting. You get a nice low volume pullback from the February 16th high at 27.30. You're actually challenging this 14 million share low on October 25th, $23.87 with 14 million shares. And you got a miserable, I'm going to talk about miserable, wimpy 3.4 million shares against that 14 million share low. So you got a lot of stuff really kind of winding up here, which is these lighter volume or less energy pullbacks than the moves higher, and then now tests on incredibly light volume over the next couple of days, a 3-day weekend, and then the possibility of going higher next week into fund buying. MSFT, actually fund buying starting tomorrow. Okay, okay. Microsoft down to 88, 87.54. You had a huge reversal and a dark cloud covering candle yesterday on fairly decent volume. The question would be, is anything specifically changed in Microsoft? And I think the answer is no. To me, a lot of these big caps are just getting painted with a broad brush because of the extra stinky ones like Tesla and Facebook and some of the other ones. Are these things vastly overpriced? I think all of them are, and that's why I'm not in any of these. But at the same time, could they go higher? Yes. Do I think before any significant pullback to break down lows happen in Microsoft, do we see $100 on it? I think so. It still looks to me like this thing does go through it. We talked about that maybe 2 or 3 weeks ago about how when stocks hit 90, they probably go to 100. And someone sent me a link to some other guy that had done a study of it. I couldn't remember who it was. But a pretty good batting average for those stocks hitting it. The problem is, one, you're basically playing those for 10% higher profits, which is not enough for me in the risk-reward department. The second part of it is it's not uncommon for these things to drive you nuts, just like Microsoft is right here, getting set up to do that. So just one of those things where, yeah, is this probably some kind of low? I think so. Could we see people come and buy it into Monday and Tuesday? Certainly, if you're long this thing, you want to see Monday and Tuesday as good days in this. If you've got either sideways or nothing happening Monday and Tuesday, you got to really scratch your head on Microsoft. But other than the horrible one-day candle, which is all not big enough, everybody's going to call it a reversal candle, which it is. But how good are those? What's the batting average of those reversal candles by themselves when they're not at highs, previous highs or previous lows, when they just kind of come in the midpoint of these trading ranges? They're not as good. So to me, the bigger thing would be the trend and this thing getting ready to go up and hit 100. My guess is this probably, if it's going to go south, that this is going to hit $101 and then go straight south. It's not probably going to go south from here. At least I don't think so at the moment. I don't see anything. As we said, probably the worst segment of the entire market has been this Kimco Realty Corporation and others like it in these REITs. We talked about how that was the first big sector, and it started to worry me back in January. We were talking about how REITs were linked to bonds, and now we've got a flattening yield curve. But we've got some intervention in there today by some folks, and things look a little bit better, although we've got a flattening yield curve. In fact, the headline this morning for bonds were that yesterday we hit the lowest level in yield in the yield curve since back in 2007. So pretty good indication that everything's flattened out, and maybe that's exactly what you needed. But again, a lot of these, like I said, in this housing sector that everybody is writing off or was writing off, actually had a fairly good signal here. February 9th, you had $13.70 with 11 million shares. You went up to $15.92. You came back. That energy on that pullback in Kimco Realty wasn't on more energy. It was on less. You tested the low on 50% of the volume, and now you got a pop. Not a lot, but you don't have a lot of volume in most equities today. We'll be back and we'll finish the rest of this up.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I think we just got a couple of minutes to go here now. And the question is, what's going on with Tesla now that it's broken? I don't think I've changed my tune for this thing. It's a $40 stock on paper. That's the best that I could ever have come up with. It was a $40 stock on paper. It's probably still around a $40 stock on paper if you're betting on the long term. I don't think anything's changed. The only thing is, when do the people like Bitcoin give up on a pipe dream, which is that this thing is somehow different, or they've got some kind of magic sauce that someone else can't duplicate? And the answer is they don't. Actually, Tesla for a number of years was the biggest electric vehicle maker. BMW will easily pass them this year. They will have 17 new cars that are in this range to compete against in the next 12 calendar months. So they never were. The only thing that bugs me is that everybody else in the world already knew it. and the short interest on this thing has been hovering around 30 to 40%. And it just, from any ludicrous story that might catch fire, like they sold 10,000 of something, always makes you think that you can be on the opposite side of that short squeeze, and why I wasn't short lately. We did short that at like 358 and got 30 quick bucks out of it. So I did do that at the last high, and then, you know, could you have reshorted at 340? Could have, but short interest was already back up to like 38%. So, you know, I had to take my shots on this thing. Made money on it several times, maybe 5-6 times over the last year. Short on it, or not last year, but years. I think probably stopped out of it a couple of times. But that's the story of super highly short stocks. Always tough to time exactly. Anyway, we'll be here tomorrow. Same bad time, same bad channel. And you know what? So when you can, yeah. See you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.